Yes. Ready when you are, Adele.
Okay. Good morning, everybody. Welcome to CELIMO economic presentation today. Thank you very much for all of you for attending this presentation. I believe that it will be very useful for all of you, for your companies, for the future decision. And Mr. Jeff Noon will start the presentation. Thank you again. You can start, Jeff.
Thank you, Adele. Just a couple of small housekeeping points before we start. Just to let you know, this is being recorded and we will share that on YouTube, the YouTube channel afterwards if you need to refer back to anything. We will be circulating the slides and the notes via the associations later today. If you could stay on mute during the meeting so that we don't get interruptions. And finally, if you have any questions, please feel free to put them in the chat box and we will come to those at the end of the presentation. I've been told I need to go a little more slowly than usual. I tend to get a bit excited sometimes when presenting, so I will do my best to go more slowly. But if you have any questions or things you didn't quite catch, I guess to say, please put them in the chat function and we can take it from come back to them at the end. It certainly looks in the current economic situation as though Europe is heading for a second round of recession. Economic recession is defined as 2 quarters of non-positive growth. In other words, 0 counts. And we had the recession in the first and second quarters of 2020, and it now looks as though the fourth quarter and the first quarter of 2021 will be negative for Europe as a whole, although not, as we shall see in a moment, necessarily for all the individual countries. So it's been something of an economic roller coaster ride recently, as you can see from this chart. If we focus on the columns, which is the blue columns on the chart, you can see over here the 2 negative quarters in 2020 and then another one right at the end of 2020. And these figures are for the European Union as a whole. You can also see, excuse me, the 2 previous recessions back here at the time of the financial crisis and here, which was the Euro crisis. Not a very significant recession, but nonetheless, there were actually 6 negative quarters in a row in 2012 and into 2013. So we've not seen anything on that scale. We've seen a much bigger fall, a much bigger rise in GDP, but actually shorter in terms of period that it has lasted. And we're likely to see, as I said, a double dip recession with the last quarter of 2020 and the first quarter of 2021 being negative. Now I've got a set of 3 charts here which look at GDP for the individual countries. Rather than quarter on quarter change, this looks at the level compared to a year earlier. So these are effectively annualized growth rates for the economies. It's an approximation, but it's effectively what we're looking at. And you can see here, these are obviously the largest economies in the European Union, well, in Europe, not the European Union anymore for the UK, of course. And you can see a similar picture. Germany maybe not on quite the same scale as the other four countries, and a slightly different picture in the very end of 2020. So you've got a downturn in France and Italy, and a small one in Spain, not so much, but it hadn't recovered as far. But actually growth in the United Kingdom and Germany. And growth in the United Kingdom and Germany in the fourth quarter of 2020 means that they're likely to avoid a second round of recession, because you need two negative quarters. It's almost inevitable that everyone will have a negative first quarter of 2021, given the restrictions and so on. Sorry, I've lost my mouse there. A bunch of sort of perhaps medium-sized and relatively small in the case of Finland, but sort of medium to small economies. And you can see a similar pattern. Just bear in mind the scale on the chart that doesn't go as far down as the previous chart. So although Belgium, for example, looks to be much weaker, it's not -15, whereas most of the countries on the previous chart were more than -15. And again, you can see a mixture at the end of 2020. You can see a fall in Belgium and Austria and in Netherlands, but not in Switzerland or Finland. And again, it's Switzerland and Finland and then possibly Netherlands that will avoid a double dip recession. And the final batch of countries, Turkey's on this chart because it actually fits better with the trends and the scales on this chart. But the other four obviously aren't CELIMO countries, but they are European Union members. And again, you see a better picture, maybe, not so much of a downturn in the end of 2020. Turkey is notable, though, because it's the only country which has actually seen its economy at a higher level than it was a year ago at the end of 2020. It's the only country where the line on these charts has been above zero, which means the economy was bigger in the fourth quarter of 2020 than it was in the fourth quarter of 2019. A quick look at unemployment and inflation. The unemployment data has been remarkably good in some respects, although in a lot of countries there's a distortion to the unemployment numbers. Some countries it's illegal to fire people. Other countries have significant support for keeping people in jobs. UK, Germany, other countries like that as well. And so we haven't, at least yet, seen unemployment rise as far as it might otherwise have done, given the massive shock that economies have seen over the last year. You can see a bit of a wiggle in this path, but we're still some way from the financial crisis or the euro crisis levels of unemployment in either the Eurozone or the European Union as a whole. It's worth saying that as some of these policies start to unwind as we go through the year, we may well see unemployment rise further, and it'll depend very much on the policies that individual countries have as to how far that will go. Inflation.
Dale, venga.
Somebody mute them, please. Thank you. The inflation has been relatively modest. The European Central Bank's target is that inflation should be below but close to 2%. And you can see that even with the pickup in inflation that we've seen in the first couple of months of 2021, we're still some way from 2%. We've not been at 2% since 2018. Having said that, there is a range of inflation rates across Europe. as you can see from the bottom chart. And some countries, mostly smaller economies, Spain's probably the most significant one among them, where we actually have deflation. So inflation is negative. That means prices are falling rather than rising, which on the face of it might sound like a good thing, but actually economically is not a terribly good thing. It's for an economy to have long-term deflation at least. And just to sort of round off this sort of overview of some of the high-level whole economy data, if you like, the euro's been a bit mixed over the last few months. As with most of these charts, we need to look at the far right-hand side of the chart for the most recent data. But the long run is useful because very often we need to think about where are we now compared with history. So it's useful to have quite a long run on the charts. But you can see that the euro has weakened against both the UK pound, the blue line, and the US dollar, which is the green line, over the last few months, and that's largely to do with vaccination rates. Foreign exchange markets like vaccinations. They see it as a route for economies to expand, recover more quickly, open up more quickly, and therefore recover more quickly. That weakens the euro, given the relatively slow pace of vaccinations compared to, say, the US and the UK. In contrast, however, you can see that the euro has risen against the yen and the Swiss franc. I'm not sure why the Swiss franc particularly. The yen may also be a vaccination rate. I mean, those of you in Europe who think vaccinations have been fairly slow in Europe should be thinking you don't live in Japan. They've done almost no vaccinations in Japan, very, very small numbers. So there may be a vaccination story going on in the yen rate. I'm not sure why the strengthening against the Swiss franc particularly. So let's start now to drill down a little bit into the economy and look at what's going on more generally. The European Commission has a survey. Well, it actually draws on surveys across in individual countries, but it creates a European level results from all these surveys. And you can see one of the key top line indicators is the economic sentiment index, which is the blue line on this chart. And you can see that is now back to 100 for the first time since February 2020. So the first time in a year, just over a year. Now 100 is significant because the way this is calculated, 100 is the long run average. So for the first time in 13 months, the economic sentiment within Europe is back to its long run average level. And that's a positive story, made even better if in many ways for us, in the industry is leading the way. It's the close contact services that are hit hardest by COVID restrictions in most countries, at least. And industry, while not unaffected, has certainly done better through most of the last year. And you can see this in the confidence indicator for the various sectors. There are 5 sectors that this is calculated for. Industry is the red line, so we're looking at the red line on this chart. And you can see that industry was pretty weak in 2019. It was the weak spot in 2019. But you can see that certainly as we go into 2021, alongside construction, industry is very much leading the way in terms of a recovery in confidence in Europe. I should just point out the latest data here is for March, but really the data collection period means it was published in March. It really refers to what was going on in February. And then another element of this analysis is the business situation. So over the past 3 months, which is the left-hand chart, and over the next 3 months, which is the right-hand chart. And again, without getting into a lot of detail, the message from both of these really is that industry is the best part of the economy, certainly at a Europe-wide level. Even if not necessarily in individual countries, there may be specific things happening there, but you can see that industry is certainly leading the European economy out of the crisis. The next element that I want to focus on is PMIs, and you can see here that the Eurozone PMI for manufacturing. So we're now starting to move away from the whole economy view and look specifically at manufacturing, and we'll come on to some of the individual industries in a few moments. You can see here the Eurozone manufacturing PMI in March, and this more or less is March. Their data collection is at the end of the month. Is at a record high level. It's never been higher than it was in March. Output, new orders, exports and purchasing activity were all at record high levels for the Eurozone as a whole. There are some differences in individual countries, but for the Eurozone as a whole, it was at a record high. PMIs brings together various factors in a weighted way. The other important thing to note is that there is a breakdown, a small breakdown into consumer goods, intermediate goods and investment goods. And investment goods are the leading the way very much in terms of this recovery. Along with intermediate goods, it's the consumer goods side that's perhaps a little weaker. And then just looking at the individual countries within the Eurozone, we'll come on to the non-Eurozone countries in a moment. Germany and the Netherlands both had their highest ever readings of the manufacturing PMI in March. France and Italy were very close to their highest ever readings. And Spain, although Spain is a little bit behind the others, Spain is the bright blue line on this chart. Although Spain's been a little bit slower in recovering and been a little bit behind some of the others, nonetheless, March 21 was its highest level since 2006, so for 15 years. So you can see that this very strong indicator is being shared around certainly around most of the Eurozone countries. Now, there isn't a Europe figure, if you like, for the PMIs. The only aggregate we have is the Eurozone figures that we've just seen. So these are the other European countries for which a PMI is available. A couple of countries don't have them. Belgium and Finland don't have a PMI. The 4 countries on the left-hand chart are the other European Union members, and the 4 countries on the right-hand chart are the other major European economies that have a PMI. And you can see that while the general story of a strong performance is repeated in most countries, Hungary on the left-hand chart, the sort of olive-coloured line on the left-hand chart, and to perhaps a lesser extent Turkey and Russia on the right-hand side, haven't seen that, in the case of Hungary, a very sharp fall actually over the last couple of months, and a more neutral position for Russia and Turkey in March on the right-hand side. So although it is a general story of industry doing well and manufacturing doing well, there are exceptions and to that general trend, as we'd probably expect to see. So capacity utilisation, we've seen an improvement there. Again, the EU and the Eurozone very much moving in parallel with each other in this indicator. You can see that there's been a significant recovery in capacity utilisation levels. Really at the end of 2020, although it's called the first quarter of 21, it really refers to the position at the end of the previous quarter. but we're not yet back to the pre-pandemic levels. So we've seen something similar to what we saw in the financial crisis, which is the major dip that you see in 2009. But we're only back to the sort of levels that capacity utilisation fell to in the euro crisis in 2012 and 2013. I'll skip over this chart because it's quite complicated, but essentially most countries are around about the middle of their historical range. You can't really compare capacity utilisation levels between countries, but you can see most of them are around about the middle of the range. There are some exceptions in some of the smaller countries, most notably perhaps in the middle of that chart with Cyprus, which is very low, and Latvia and Lithuania, which are relatively high, but generally about the middle of the range at the moment. And just as a comparison, but for large European Union economies here, remember you need to read this chart only across the chart. You can't compare the numbers between Germany and Spain and France and Italy, but you can compare where those countries are historically. So we see Germany, Spain and Italy getting back towards their pre-pandemic levels, not quite there yet, but getting back towards it. France, most notably not. France is the one that seems to have taken the biggest hit in terms of capacity utilisation. And while it's recovered, you'll notice that certainly immediately before the pandemic, France and Germany were at about a similar level. You can see France is further from getting back to that level. So again, a general trend, but not everyone exactly on that level. And profitability and investment levels, you can see profitability recovering quite nicely, in fact, and not doing too badly. But the investment rate still fairly weak in Europe. Investment, of course, is an important driver of demand for machinery, at least. Not so much for tooling, but certainly for machinery. So let's start taking a look at output across Europe. This again is total industrial production, which is mostly manufacturing, but does include things like utilities and extraction activities as well. And you can see a couple of things happening here. For some time, the European Union indicator has been a little bit higher than that for the Eurozone, and that has persisted through the crisis, really, and into the new data. We see a reasonable recovery in industrial production across Europe as a whole, at least. Both series almost got back to that pre-pandemic peak, not quite, just a fraction away in the case of the European Union, a couple of fractions away, if you like, for the Eurozone, almost there. But February seems to have been a weak month. Now, there may be some seasonal adjustment issues going on in the data. This is seasonally adjusted data. So we need a couple more months to see exactly what's going on there. So it may be seasonal adjustment. It may be reflecting a new round of lockdowns, which is happening in a lot of Europe. Although it's perhaps a little early for that. We'll need a couple more months data to really see what's going on. But at the very least, there's been a bit of a pause in industrial production, but it's not collapsed by any means. Within industrial production, we can look at data for manufacturing, which is the black line on this chart. And then I've also included capital goods. So capital goods are things that really depend on investment. So you can split manufacturing into capital goods, intermediate goods, which are generally things that are then used in other products, and consumer goods, which are goods that are sold to consumers, rather than capital goods which are sold to businesses, generally. You can see that manufacturing hasn't done quite as well as total industrial production. Manufacturing hasn't yet got back to where it was before the pandemic. It's not far short, but it's not quite there yet. But equally, I should also say this is only quarterly data, so it only goes up to the end of Q4. So we don't yet see that dip in February that we saw on the previous chart. And capital goods more affected than manufacturing as a whole. Some aspects of consumer goods, things like food and drink, and pharmaceuticals in particular, actually did quite well during the recession, during the downturn, and so they keep the total industrial production figures and the total manufacturing figures higher than the capital goods sector experienced. And then we can break those down into our four key industries, which are on this chart. Just a few comments about this. You can see the massive hit that the automotive industry took during the recession. Most car production stopped for 6 to 8 weeks after the COVID outbreak started in Europe. It's also worth noting, however, that automotive was on its way down before the pandemic hit. You can see that this is really the start of the pandemic here. But you can see automotive output was already falling, really from 2018 onwards. So it's a slightly false picture, the fact that automotive output is almost back to its pre-pandemic levels by the end of 2020, by the fourth quarter of 2020. You see a much smaller cycle swing in the cycle for machinery and metal products, which are the red and orange lines on this chart. And then other transport equipment is mostly aerospace, although it does include things like motorcycles, sorry, not motorcycles, cycling, and railway equipment and shipbuilding. You can see a bigger swing somewhere between that for machinery and automotive, but a much weaker recovery in the other transport equipment sector. We could use aerospace on this chart, but a lot of countries in Europe don't have data specifically for aerospace. So I've used the other transport equipment category as an indicator really for those industries. And just to finish this presentation, I want to take a closer look at 2 or 3 of those industries and just give a flavour of what's happening globally, as much as just in Europe, just to give a flavour of those industries. I'm conscious that many people on this call will be maybe focused on 1 or 2 industries in particular, so try and have a look at some of the major ones for you. I'm going to start with the automotive industry, where the recovery really around the world appears to have tailed off in the latest data. So this chart looks at sales. Very often the question is how many cars will be made. That's what people on this call will need to know, because that tells you how many machines you're going to sell or how many tools you're going to sell. But actually the question is how many are going to be sold, because you shouldn't be making cars if you're not going to sell them. That's not a profitable way of doing business. So looking at car sales is a useful indicator for our business. And you can see that even in China, which had quite a strong recovery, car sales in China by the summer of last year were above where they were at the end of 2019. And then subsequently we had a recovery in Japan, which is the grey line, and in Eastern Europe, which is the light blue line. Nonetheless, Western Europe, which is the gold coloured line on this, which is probably of most interest, although quite a lot of cars are made in Eastern Europe, the major markets are in the western half of Europe. You can see the Western European car market, apart from August last year and just briefly at the end of 2020, hasn't got back to its pre-pandemic levels, and indeed in the last couple of months has fallen back quite a long way. So that's a bit of concern for our industry in the short term. And then in the longer term, there's also the question of what type of cars are people going to buy in the future. Now, that's quite a difficult question to answer, but I just want to use this chart, which is registrations, effectively sales of new cars in the UK. I've used the UK because easy access to the data. It will be a similar picture in many countries. Slight differences in emphasis maybe, but nonetheless a similar picture. And this simply compares 2019 with 2020. So it's 1 year. This isn't a 10-year trend or a 5-year trend even. This is 1 year. And you can see that the share of vehicles bought in the UK between 2019 and 2020, yes, the numbers fall. The numbers are much smaller. What we're looking at is the share of that. And you can see that the share of diesel and petrol vehicles falls from almost 90%, adding those two categories together, to just over 70%, just in 1 year. Now, some of these vehicles, the mild hybrid vehicles, the green bar on this particular chart, still have an internal combustion engine in them, and they still have a gearbox in them generally. That's the definition of a mild hybrid. It's a battery assisted system rather than a battery electric powered system. There's obviously an electric motor involved, but the principal work is still done by the petrol or diesel engine. So those vehicles will still need an engine and a gearbox, which is where a lot of tooling goes. But equally, there's been a big increase in electric vehicles, which in this chart covers battery, plug-in, and smaller hybrids, where the engine is used to charge the battery rather than to drive a powertrain. And that trend is only going to continue. The question is, how far will it go? How quick? Not so much how far it will go, rather, but how quickly it will get there. Many European governments have a policy of moving to electric-only vehicles within the next 15 to 20 years, some a bit quicker, some a bit longer. So it's really a question of how long it will take to get to that level than where it will end up. The aerospace industry has been hit very hard by the coronavirus crisis. There's been an almost complete collapse in air travel. International air travel in January was 86% less than in January 2020. So you can see that there's been an absolutely massive hit. Yes, a lot of aircraft have been flying, particularly the long-haul aircraft flying freight around the world, and that will continue. But nonetheless, a lot of airlines are deferring deliveries of aircraft, and it's going to take the aerospace industry some time to recover. As you can see, air travel is improving a little bit in Asia and North America, but still a long way below where it was, has been for some time. And actually in the European Union has ticked down in the latest couple of bits of data. So this is the recovery tracker, if you like, for manufacturing in aerospace. Now there's some complications in this chart. Things happening in Canada, particularly in Japan, with aircraft models being discontinued or changes of ownership, which have affected some of the output numbers, particularly in Japan. so it's a little bit misleading there, but you can see none of these lines. Think back to that automotive chart we had a few moments ago. Apart from Western Europe, a lot of it was going on around that 100 mark, around the pre-pandemic level. This in aerospace, no one, even the US, is nowhere near getting back to that pre-pandemic level of 100, way below the general trend for industrial production as a whole globally, not just aerospace, but everything that's manufactured. A much weaker picture that we see for aerospace. And finally, for machinery, a mixed picture, more mixed for machinery. Some countries have not done too badly. Korea and Japan in particular, Korea and China, which you can see here. Japan not done quite so well, just about got back to 100. The data there, and it goes up to the end of December, so it's a little bit difficult to tell what's happened recently. Most of the other lines on this chart, Germany and the Eurozone, which are the orange and blue lines, just about got there in January. The US similarly, January, February, around about that 100 mark. And the weak country here obviously is the UK, the grey line, which you could see towards the bottom of this whole chart really. So the biggest fall we saw a year ago, or April last year, and by January 2021, falling again. And that's probably a Brexit story in terms of the UK. I'm not going to talk about Brexit, but if anyone wants to ask a question, I'm happy to discuss that in a few moments. That more or less brings me to the end of the presentation. I just wanted to highlight in the report that you will get, the slides for this chart, there is what I've called a country report, and I've done them for all of the CELIMO members and for 5 other European economies. And I've picked Germany, partly because it's the biggest economy, partly because it's not a CELIMO member, so I can't be accused of favouring one over the other, any other. Just to show you what will be on those sets of charts. I'm not going to go through all the countries because that would take too long. But on the left-hand chart, we've got GDP, inflation and unemployment. And this includes a forecast for 2021 for those indicators. In almost all cases, that's taken from the latest European Commission forecast, which was in February. The next one of those will be published in May. So we're a little bit past, it's a little bit out of date, that forecast, but not significantly so, I don't think. And then on the right-hand chart, you've got 11 years worth of data for output of those 4 key industries that we saw earlier. And again, with Germany, you can see the automotive industry took the biggest hit in 2020. Machinery and metal products were down somewhat, to a lesser extent, and other transport equipment negative. Interestingly, in Germany, not quite as bad as in some other countries. And that may be a railway equipment story helping to maintain the picture that that sector and hiding a little bit the aerospace downturn. So I'm going to leave it there. I've been about 35 minutes, which is what I was aiming at. I'm going to leave it there, and I'm happy to take any questions you might have. I'll just stop the presentation so that we can see each other. Just trying to see if there are any questions in the chat box. I can't see any at the moment. If anybody's got any questions, I mean, if you have got a question, feel free, perhaps unmute yourself and ask them, or stick a question in the chat box. can't see any questions, so I think if there are no questions, Dave, do you want to unmute yourself and
yeah, just a quick question on aerospace,
yeah.
Jeff. Do you have a view on what the likelihood speed of return of recovery would be for aerospace?
Apologies, there's my dog barking in the background. Yes. In summary, slowly, which probably isn't very helpful to you, I know. A lot will depend on international travel, I think. And that really is something that individual governments are taking different approaches to. I mean, to pick the UK, for example, we've actually seen restrictions on international travel tightening. I mean, for most of 2020, it was actually not that difficult to travel internationally. Now, I mean, nobody wanted to, but it wasn't actually that difficult to. In 2021, partly because the UK has been more successful in vaccinations and reducing the infection rates, the government's realised that it's got to try and keep that out and has imposed more stringent restrictions. I mean, we only had hotel quarantining in the last few months. So you need to think about how international travel is going to recover, because only when people start flying again in big numbers for holidays or for business, that will generate the need to use aircraft, will generate the need to buy new aircraft, and for that aerospace manufacturing to recover. I mean, there have been some other things going on, of course, in aerospace, all the Boeing problems with the 737, and now to some extent with the 787, which have affected the actual numbers if you look at output. And so we may see some slightly odd things going on just if looking at the output numbers, as particularly as all those 737s are delivered. Yeah, I mean, it will be a slow process. Probably, I think you're looking through 2 or 3 years down the line at least before we see a real recovery going on in aerospace. And I think it will be a gradual path to that. I don't think you'll suddenly see a pickup as we did with automotive, for example. If you think back to that automotive chart, very sharp down, equally a very sharp up, very much a V picture. I think aerospace is going to be a Nike tick, if that is a good analogy. So never in fact really getting back to probably its pre-pandemic levels, I suspect. It may do eventually, but a long time in the future. Got a question from Maro. Just open that. Oops. Are you already seeing benefit? I mean, presumably, Maro, this is a question about the UK and the vaccination campaign. Yes, we are. Certainly, the infection numbers in the UK are significantly lower than they have been for some time. It's a little bit difficult to tell how much of that is lockdown and how much of that is the vaccination campaign. I think it's significant. We're 3 weeks from, more than 3 weeks now, from when some of the schools went back. Not necessarily all of the schools went back, but certainly some of them, and we haven't seen that rise. The impact economically is a little more uncertain, and probably the answer is no economically, because we've still been in a situation of lockdown. So we're now, the UK is now starting to ease from lockdown. Shops are opening, But that's only been in the last couple of weeks. Different parts of the UK have done it at different speeds. So it's a little bit early to see the economic recovery, except, as I mentioned, the UK grew in the final quarter of 2020, and although it will be negative in the first quarter of 2021, it won't be that much because of all of that activity around test and trace and vaccination, which our statistical authorities are capturing as economic activity, and also pharmaceutical output numbers as well, so in a quite specific industry. So in one or two specific areas, you can already see the effect of the vaccination program, if you like, on the economy. It's a little bit early to see that recovery. As I mentioned in the exchange rates slide, one of the reasons why the pound has been a bit stronger against the euro is effectively the foreign exchange markets taking into effect, you know, the UK's vaccination program. They see the UK economy opening more quickly than the European economy will do so, and therefore effectively the price of the pound goes up, the price of the euro goes down. So there are some economic impacts you can see, but a little bit early to see much in terms of GDP or economic activity. Don't know if there are any other questions. Can't see any hands up or any text. We'll just give people a moment or two to answer those questions. I think probably if there aren't any more questions, we'll leave it there. Erdal, I don't know if you want to say anything as president at the end of this meeting before we close.
Yeah, I think there is no more question. Thank you very much, Jeff, about the presentation. And also, I want to thank you very much to all of the participation. And have a good weekend, everybody, and healthy days. I wish healthy days to everybody.
Thanks. Bye-bye. Have a good weekend.
Yes, have a nice weekend.
Thank you.
Bye-bye.
Thank you, Jeff.
Thank you. Bye-bye.
Bye.
Bye-bye.
Thank you, everybody. Bye-bye.
Bye-bye. Ciao.
Thank you. Bye.
Thank you, Joe. Thank you all.
No problem.
Bye.
Thank you.
Thank you, Joe. Bye-bye.
Bye.